Hey guys, welcome back to Andrew Invest. Hope you've had as great a week as I have. I hope you've made many gains. Today I want to tell you why Reddit is an awful place to be if you're an investor who wants to beat the market, who wants to get great returns on individual stocks, and in general, why Reddit is just a terrible place to be, especially for investing. I also want to show you my portfolio, my performance during the last week, and take you through some of the stocks that have done the best, and as usual just give you a portfolio update. That will be at the end of this video, so without further ado, into why Reddit is awful for investing advice. Right, reason number one, Reddit generally follows the general sentiment in the market and it doesn't provide any unique insights into what's going on. So to start off with, if we look at this search website, which basically you can search for posts on certain subreddits between certain dates. So for now, I basically want to look at what the general sentiment towards COVID was during January 1st, 2020 to February 14th, 2020. So at this point, the COVID virus was pretty much spreading throughout China and it was already starting to spread into other parts of the world, such as Italy. However, the stock market continued to climb upwards. If you look here, it just kept going up, and it wasn't until, the 14th of February-ish where it started to collapse. Now, if we look at your weekly stocks recap posts, which basically show the top posts on the stocks subreddit for the last week, we can see the general sentiment of that subreddit at the time. So as a reminder, this is the week before the stock collapsed. If you look into this post, you can see the top 10 posts are pretty much all about Elon Musk, Tesla, just general investing tips, Tesla, China injecting liquidity, so bullish, I guess. Twitter shares soaring, pretty much all standard, Tesla bullishness. And I would consider Tesla to be a stock that does very well in bull markets and pretty terribly in bear markets anyway. So when you look at this, you wouldn't even know there was a virus around at the time, even though it was literally just about to cause the global economy to tank. And that's reflected in the market, and you see the exact same thing on Reddit. So Reddit doesn't provide any unique insights, really. Doesn't say like, oh, you know what, the market may collapse within a week or two because of the coronavirus or anything like that. You wouldn't even know it existed. A week before that, we can see a very similar thing here. It's just basically talking about earnings doing well, companies doing well, their stock prices going up. There is this one post here, which is about coronavirus not being under control. However, when you go on it, the first comment, it says, I think the tangible impact of this virus thingy is overblown, but that doesn't mean investors won't get emotional about it, which is true, but it's not really a unique insight at all. I take you through the general stocks subreddit sentiment from Friday, April 3rd till April 9th. For context, the S&P 500 had already bottomed out during this time, about 3 weeks prior, and was due on course for like one of the greatest bull runs of all time, potentially. It went from a bottom of 2.3K to 4.7K, over doubling in that time. So let's see what people on the stock subreddit were saying you should do. So top post is basically saying, I've never lived through the pandemic. I've no idea what the market is going to do. The second one is, how messed up is it that our financial system in the middle of a global pandemic is only minus 5% from April 2019. So this is extremely bearish. This one here is implying you should wait before you buy. Pretty much the entire sentiment is extremely bearish, apart from maybe this one here, which is saying that you can buy now. You don't have to time the bottom. However, if we look into this post here, which has 1.3k comments, there's people that have done huge write-ups on how the market is due for an even bigger crash, and that it's a bull trap, this small little bounce that we've had. Basically saying the Fed's extremely nervous, trying to plaster any holes. The auto sector is going to ask for a bailout, corporate bond markets to collapse, chaos in the real estate market. These are some of the most highly upvoted comments. And obviously, none of these things happened. And yet Reddit terrified people into, thinking that they should sell out of the stock market, or that, they should not buy into it effectively. The week afterwards, very similar sentiment. When there is a true bottom / recession, buying won't be easy. That rings true today as well, doesn't it? That rings true today. People waiting for the absolute bottom to buy in. More bearish sentiment. People selling Netflix, which actually did really well during the pandemic. It had a lot longer to run. Worst recessions since Great Depression, stocks at all-time highs. So this really demonstrates that Reddit really provides no valuable insight. It just repeats what the market is already saying, and it drills it into your head what the market is saying. So you effectively lose any advantage that you have as an individual human being, having maybe, thought of your own that potentially the market is undervalued right now. You go on Reddit, you see all of this bearish news, you'll be completely, effectively brainwashed into thinking, I should not buy, I should sell, or, I should wait for a month, 2 months, 3 months, 6 months. I'm going to wait until the market bottoms out again. And then you never end up buying. I'm not going to lie, at the time, I was, I also fell for this kind of thing at the time. But, if a pandemic ever happens again, I will not be making that mistake. But I wanted to show you guys how bad it was at the time. The second reason why Reddit isn't useful as a source of investing information is that it's full of bots. The narrative is effectively easily controlled by people who are able to pay for bots and upvote whichever post they want for people to see. On Reddit, you usually will only look at the posts that have the highest number of upvotes. And if you're able to buy a large number of bots to upvote whichever posts you want to be seen or generate posts, you can effectively control what everyone on Reddit is seeing, what the general sentiment is, and make people believe that other people also believe that kind of thing. Now, this is really common on politics, news, subreddits, things like that. But I think it's extremely common also on stock subreddits. So on notorious subreddit like Wall Street Bets, at one point it was finding that 97% of posts were generated by bots. Now, I'm sure this was a number that peaked during this particular time, and it's not that high normally. However, it really shows the power that people who are buying these bots have. Like, they wouldn't be spending the money for these bots without a reason, without it actually being beneficial towards them. So I can think of a number of reasons just off the top of my head why you would want to control the narrative on a subreddit like Wall Street Bets, on a subreddit like stocks. So if I am a hedge fund manager who has a bet on a particular penny stock to do really well, I can go on Wall Street Bets, get a bunch of bots to basically post messages saying, oh, this stock is amazing because of XYZ, get it really highly upvoted. Everyone will start buying in, like real people, because they can see that it's really highly upvoted and think that everyone else is getting in as well and not want to miss out. And after doing that, you can effectively drive the stock price up hugely and then sell before all the retail buyers are able to get out and generate a huge profit. And that doesn't necessarily need to be hedge funds. That can be anyone who's able to afford bots, which are relatively inexpensive. So if you want to basically, Reddit is effectively just a terrible tool for for investing. And there are some subreddits that are good, which tell you just DCA into the market, don't buy individual stocks. Sure, that works for some people, but especially for individual stock buying, Reddit is awful. So now that that's over with, let's just move on to my weekly portfolio update, where I basically will go through all of my holdings and explain why there's been market movements in the prices of them. Okay guys, so it's been a pretty fantastic week for gains. It's possibly the best 1 week returns I've had since I started the portfolio over 2 years ago now. I haven't actually put in any money since my first video in December, just before Christmas, and the portfolio then was valued at £69,000. So I've made over £10,000 in 2 months, and at the time I was pretty gloomy about my returns, having basically only made a loss in 2022. But it really shows how quickly the market can change and how quickly market sentiment can change, because now I'm sitting pretty in the green, and quite sizably so. I haven't actually invested any extra money for a while, because I'm trying to build up an emergency fund because of all of the recent tech job cuts. I'm a software developer, so that's just for insurance. I'm sure I'll be okay. But yeah, the new investments will be coming soon. So individual portfolio wise, obviously Meta completely smashed it this week. It's up nearly 30% in pound terms, up 25% in dollar terms. Its earnings this week wasn't actually as good as the market seemed to take it, in my opinion. However, obviously the stock was really undervalued already, so it makes sense that there was a lot of demand for like a stock at this low of a PE ratio. Overall, I'm still down on Meta because I bought in at a pretty bad time. I have been trying to buy more as it went down. I even bought £1,000 worth when it was at $90. So that has obviously paid off pretty well and helped my returns significantly. At this price, I'm not looking to buy more of it. If it does go down significantly, or maybe 20%, I'll probably buy some more. But at this price, and with it being this higher percentage of my portfolio, I'll probably hold off on that. Apart from Meta, Apple, Google, and Microsoft, and Amazon all reported earnings this week, and they all did really well in terms of performance, at least. However, earnings-wise, their earnings were pretty poor. So I don't really think that their performance actually has anything to do with their earnings, because their earnings were atrocious. Potentially Apple may have done better than the others, because a lot of their revenue and profits may have been shifted into the next quarter. So Apple actually showed a revenue decline for the first time in literally decades, and that was pretty awful. But that revenue may climb back in the next quarter due to China reopening. Also, Alibaba has really started to turn around now. It's starting to go downhill. I don't know. I'm not sure how to feel about Baba. There was a recent story where the Chinese government took basically bought golden shares in the company, which allows them to effectively have the deciding vote on any issue which may involve shareholders, which is not really ideal. Like, a company should be run for the shareholder, and in this case it's effectively covertly being turned into a company which is being run for the government, which obviously isn't good for shareholder returns. I'm really questioning my investment in Baba, so expect to hear more about that in the not too distant future.